Hello, guys. Dividend Enjoyer here, and today I'm going to be talking about my $42,559.97 stock portfolio. Currently down on an unrealized basis, $1,639.35, or 3.71%. Currently, an interesting thing happened too. Salesforce is now my second largest position, going from my first largest to Waste Management, because Waste Management has been coming back a little bit recently. And Salesforce has been continuing to drop and doing poorly. But I believe Salesforce is still going to be a hold in my portfolio. I'm not necessarily adding more yet. Maybe I should actually add more, but I'm waiting for the current earnings to see what I should be doing with the stock because I'm very cautious about the stock. Now, I have invested over $10,000 into Salesforce, and I'm obviously down on an unrealized basis to about 1878. So, I have definitely thought about selling this out just to get like a tax loss to be able to write it off. But I actually think I'd rather just hold it. I really do believe truly that this stock is probably objectively undervalued here. Again, I'm not a financial advisor, and that's not financial advice. But in my personal opinion, I think that this is a very good play if you're skeptical about some of the AI claims and some of the things within AI. I think this is a good kind of alternative because a lot of the narrative about Salesforce and why it's been so negative is that AI is going to replace the business model. I don't necessarily think that's true. They've been able to continue to grow. Now they have had some slowing growth recently, and I'm hoping that that's just like a cyclical thing. But I really believe that Salesforce will continue to do well, and I think that it's going to be worth more money into the future as the cash flows continue to improve. I think that the pessimism's gotten a little bit too strong here, and I really believe that in the short term, the stock market's a voting machine where people will vote on which stock they think is cool or which stock they don't think is cool. But in the long term, it is a weighing machine, and I really believe that in the long term, Salesforce is going to have very strong results, which are really going to boost the stock to where it probably should be. But I do think it presents a pretty good buying opportunity here. I think that if you're someone who wanted to get into Salesforce or was interested in Salesforce's business model, I think it could be a good time here. But it is a tech company. There is risk, so maybe the business is going to be hurt. I just don't believe that's the case. I think that they're doing a lot of very intelligent things. And I think they're very monopolistic, and I think they're also being really extremely undervalued right here. So I'm very happy with this stock. I'm going to continue to hold it. I'm not going to sell any of mine, even for a tax benefit. I'm just going to hold this out because I think investments should be very long term, and we should be able to really weather some very difficult times in the market, like right now for Salesforce. Speaking of a stock that I've already made my profits off of, though, and I'm very happy with, I have Apple, ticker symbol AAPL. And currently the cost is $623.78 for my position. And that's relevant because I made $650 in profit, realized profit off of Apple already from the 15 shares that I had. And I was talking about it, and I was telling, myself in my basement that I was going to buy anytime it was 210 or below. That was the only thing I was going to buy, or minimum, I was going to pick up some Apple. And it was below 200 at that point, and the pessimism was very strong with Apple. Nobody wanted to touch it. There was belief there could never be growth in it anymore. There was political pressure. There were all these negative things and reasons why you shouldn't own it. And I ended up buying it because I thought there were a lot of premiums that needed to be there. I had done a full valuation video on it and kind of talked about it. I thought that maybe there could be a product that Apple could unveil in the future that could really boost everything. But it really started when Tim Cook kind of did the interview at the White House, and the political kind of question that Apple had within the regards to its supply chain kind of got answered. That really kind of made everything else go very well for Apple. So Apple continued to grow and continue to grow and continue to grow. And what I did was I sold my shares for that profit, and I kept these 3 shares, which are under that value. So, no matter what, I'm going to have a profit on Apple. And I can just keep these 3 shares, and they can pay me for the rest of my life. And if I need some money, I can sell them. And if I don't, they can just keep paying me very small dividends, but eventually that dividend will grow and grow, and eventually the shares will continue to grow and grow, and they'll split into more shares. And eventually that Apple position will probably be worth a lot more money. So I'm just going to keep that there. I'm going to like to think about if I had the other, 12 shares there, how much it would be worth. But I'm very happy with its performance, and I'm just going to let it continue to sit there and just see what it does. Next up, I have Take-Two Interactive Software, ticker symbol TTWO. Made a lot of videos on the channel about this stock because videos about this stock do very well with the algorithm, and they boost a lot of views, I'll be honest. And I really think that this stock's a good buy, though. And my reason for Take-Two being a buy is really that I believe in GTA 6. I think it's going to make a lot of money no matter what. I think it's going to be a very polished, well-done game. I'm really excited for it, and I'm very bullish on Take-Two Interactive stock for that reason. I really think the market cap's pretty low based on how much revenue this could be bringing in, but we'll see. I really want to see what happens. I think it's going to be very important for the future of the entire company, and Rockstar always delivers, so I'm very excited for it. I've been playing a lot of Battlefield, by the way, guys. I know that's an EA title, and I trashed EA before because I didn't think they could do it right. This Battlefield game's awesome, guys. Come watch me stream it. If I'm live, I'm probably playing that. Just want to throw that out there as a little kind of sponsored segment, I guess. But yeah, Take-Two. Really love the stock. Think it's going to do well. So I think it's the last video game developer that's really looking for the long term, really trying to make titles that are very strong. And I don't mean like the subsidiaries like 2K, like Zynga, like all those things. I mean mostly just Rockstar. I think that Rockstar is really the developer that makes the best titles for the long term. And I think that they're going to be doing very well into the future. I think a lot of the future of the company really rides on GTA 6 for the reason also that it's going to be the cash cow thing that's going to feed all the other projects within the company. And I want to definitely continue to hold it because I want to be able to benefit from those cash flows into the future. And essentially, I believe the company is going to grow and grow, and I believe they're going to be either one, acquired by someone else who sees a lot of synergies with a lot of their titles, or I think they're going to be able to just continue to increase their revenue and continue to increase their cash flow and just grow the market cap that way. So I think those are one of the two options for that. And I'm really very excited to see where this pans out because even though it doesn't pay a dividend, I think the stock's excellent. Next up, we have MasterCard, ticker symbol MA. This stock, I'm currently down $81.28 or 5.39%. Currently pays me $7.95 annually in a dividend. I'm really very bullish on this stock for the reason that they do a lot of different transactions. I think they're very monopolistic, and I think they have a lot of future growth going forward. And I think the business is very strong. I think people are going to continue to spend more and more money and make more and more transactions through the MasterCard network. And MasterCard's going to be able to benefit immensely from that. And I think it's going to be, very strong for them going forward if they're able to continue to get, more of their cards in more people's hands. And if they're able to also just get more of those transactions done for these different banks. So I think that MasterCard is very strong. I think the business model is extremely overlooked and extremely undervalued. I think that the premium on this type of business needs to be a lot higher than what it is because the continued growth is there. I mean, the continued growth is going to just be exponential over time. I mean, you can see it with American Express and how that's going now. And I understand they are very different business models because American Express owns the debt that they are doing the transactions for, whereas MasterCard just does the transactions, if that makes sense. So, I'm very bullish that there's going to be more transactions going forward. And I think that it's not very unlikely that that's going to be the case. So I'm not worried at all about this one. This one, I really think that maybe this should be the thing that I buy more of, actually, when I decide to invest more going forward. I'm really very bullish on MasterCard. I like the business model very much. I want to get more payment processors within my portfolio personally. And, I think it's a very strong business. I really think that there's not as much risk that you have with American Express because you're not having that debt. Obviously, there is the risk of crypto maybe replacing MasterCard. I just don't think that's going to be the case. I don't think regular people are going to be wanting to pull out the crypto wallet at the, whatever Walmart grocery store or the Costco or wherever you get your groceries. I don't think that grandma is going to be paying with fart coin. I'm just keeping it a buck. So I'm very bullish on MasterCard. That's all I want to say. Okay. I'm not going to disparage anyone. But talking about our next stock, we have ticker symbol PLD. That is Prologis, ladies and gentlemen. Currently sitting at a share price of $128.16. Current value of my position being $2,019.93. Currently up $374.15 or 22.73%. And again, I think that this business is very strong. It's obviously warehouse logistics real estate, so it's a lot of warehouse real estate. But there's also been doing a lot of forays into some data centers, that's really all it is data centers. I don't know why I made it seem like they were doing multiple things. But yeah, Prologis is building a lot of data centers, and they're making a lot of money because a lot of the people that want data centers are extremely rich and have a lot of money and willing to pay Prologis a lot of money to use their data center space. And Prologis treats those leases kind of like all of the liability is on the person leasing it from them once they can get that lease signed. And companies that are renting from Prologis are fine with that because they're usually very rich. They basically want to own the property, but they can't own the property because Prologis owns the property. And Prologis just continues to increase their rent if they want to continue using the space. And, these leases are very long. There are most of the time either very complex or very simplistic depending on what's happening. Obviously, for a data center, it's going to probably have some things where there can't be certain hazardous materials, things like that. Weird little clauses and things that I'm sure are there. But with like a grain silo or with just like a logistics company, I'm guessing that's a little bit more of a simple transaction. The growth has been there. The earnings have been there. I think the rate cuts are coming. I think that this stock is going to have very positive momentum going forward. It has very positive momentum right now. But I don't really want to buy anymore. I just want to keep the amount I have now. I don't really ever want to sell it. I kind of regret not buying more when it was as cheap as it was. But I'm very happy with this amount. I think that this is a good amount of money to have invested into Prologis. I actually found the company when I was doing a YouTube video about it. And I was asking an AI kind of, what are some interesting companies I could, make a video on. And I thought Prologis was actually a very good one to do because I thought it would be a lot easier kind of value than some of these other businesses just because it was such a, in my opinion, I think that the business that Prologis is in is very simple compared to a lot of these other businesses. I think Prologis for me is a lot easier for me to be able to value than a company like JP Morgan Chase, where there's very complex financial things that they own, very just interesting things they're doing. There's a lot of layers to it, right? Or even just like a company like right here, for example, Uber. I think that Prologis would be a lot easier to try and find a value for than Uber because it's going to have very predictable forward-moving cash flows and forward-moving revenue. And all of this is to say that after my valuation, I thought it was very cheap on the video that I'd made. So I basically just decided I'm going to actually buy this from the video, which I thought was pretty cool at the time. And stock's done very well. I mean, again, up 22.73% is really unbelievable. I probably should trim a little bit of it, but I really don't want to because I think it's the type of stock that I want to own for a very long period of time, despite the price, because I think that the real value is definitely there. I think it's very inflationary proof, and I really believe that they're on the right side of the rate cuts. So I really like Prologis for those reasons. I know this is turning into like a big Prologis rant. Moving on to our next stock, we have Texas Roadhouse, ticker symbol TXRH. Oh, guys, I really wanted to talk about this. I thought that the Texas Roadhouse earnings were very good. I like that there are more restaurants opening up. I really think that Texas Roadhouse could do very well going forward, and I really think there's a lot of growth in the business. I think Texas Roadhouse is a very strong business. I think they're a very efficient business, and I think they're very focused on trying to open more restaurants. So I'm very bullish on Texas Roadhouse. I think that it might be good to buy more of it, but I'm not super huge on restaurant stocks. And I've said before that I just want to keep the amount of Texas Roadhouse that I have now. I was down a very high amount on it, but I really believe that this stock, if it's able to continue to open restaurants, that's a very good sign for me. And I'm very happy as an investor because those restaurants are going to be bringing in money, and we're going to be able to open more restaurants. And those restaurants are going to be bringing in money, and then we're going to be able to open even more restaurants. Pretty soon we're going to get to a point where there are Texas Roadhouses pretty much everywhere, and that's when we're going to have unlock the full value, I guess you could say. And eventually I'd like to sell out of whatever my initial cost was, that $2377.59, that $2,377.59. I'd like to liquidate that amount once I'm over that in profit, and then just kind of take my money back, so then I'm like, I really can't lose on this investment, by that logic. And then continue to just collect the dividends forever, and then just sell a little bit if I ever need the money. But that's really kind of the goal, was to kind of get in on this thing as the growth is going to continue to materialize. And I do think that there's going to be continued growth here. I think that it's very bullish that they're continuing to open more and more restaurants. And I really think that these restaurants are doing very well. I think their debt's very sustainable. And I'm very excited for rate cuts for this stock as well. This stock definitely needs it as well. It's a very small cap, but I really think that the growth is going to continue. And I think that we're going to see Texas Roadhouse continue to do well in the long term and continue to be able to increase shareholder equity by increasing the amount of actual store locations that they're able to open up that are paying and kicking back. And I really think that being a corporate owner here makes sense for me and my portfolio. Next up, we got Amazon, ticker symbol AMZN. I am very bullish on this stock as well. I had sold off about 7 shares of this when it was at a high. I'd made about $650 in profit, and that's not going to show up in the total gain loss at the top. But Amazon's been very good to me. I'm very happy with Amazon, and as a long-term investor and as a long-term shareholder, I think this stock could continue to grow. It's very weird, though, because the momentum swings each way, and you get very high highs, then it'll drop again. It kind of reminds me of Meta. A lot of the Mag 7s kind of remind me of Meta, and it's usually better just to hold them for the long term and just not to sell out. That's usually historically been the right thing to do. So that's what I'm going to do with these 10 shares. I'm just going to keep them pretty much forever. Those other shares that I had sold were good profit. Makes it, easier when Amazon will have a greater dip, which it's had some of, it's had negative momentum in the near term, and it's definitely dipped from the highs that we've seen a couple weeks ago. But when it really does dip and when it really does go negative, which it very well could again, it's going to be easier for me because I had locked in some of those profits. So I don't really want to sell any of my Amazon. I really want to continue to hold my Amazon. I think Amazon is a very strong stock. I think a lot of things are being built on AWS, and they have some very, very long-term plans, and I think they're really knocking them out of the park. And I think as an investor, it just makes sense to continue to hold this stock and to not sell it. So that's exactly what I'm going to do. I'm just going to continue to sit here and hold it. I think that they're going to become more efficient in the next couple of years. I think that that's something that they're working on, is increasing their efficiencies. And I think they're going to find a lot of success with doing that. I think that Amazon is going to really knock it out of the park like they always do. And I think that Amazon's going to be able to make a lot of things go their way. And I am very excited for Amazon stock going into the future. Next up, I have Uber, ticker symbol Uber, currently down $267.48 or 9.67%. This stock also doesn't pay me a dividend. This is another one I'm thinking about adding. I'm kind of debating between MasterCard and Uber. I might add to both. I'm also debating Vici because I really want to just get to $10,000 invested into Vici, and I think the stock is very undervalued as well. So those are kind of the ones that I'm debating right now. Uber, though, talking about that, I think that ride share as a society is something that we're moving towards more. I'm kind of seeing that macro trend just personally. And I think that Uber is going to make a lot more sense as we get autonomous driving. I think that Uber is going to be the biggest winner. I think that Uber is experimenting with a lot of different things, and I think that they have the most resources out of any of their competitors within the rideshare ecosystem kind of space, I guess. I don't know, sector, if you want to call it that. But they're really more competing with the big guys. They're competing with like the Mag 7 names and a smaller portion of what some of the Mag 7 guys do. And I really think that Uber is trying to become like a $1 trillion company and really create a lot of shareholder equity. And I think that Uber is making a lot of the right moves. I think that this business is extremely valuable. I think it's very high growth. And I think that a high growth is something that you want if you have a lot of time. And I do have a lot of time. I definitely want to add more to this position. This might be the priority number one, though, just because of the percentage I'm down on it and the potential growth I think is there within the stock. I think is a lot stronger. But Vici does have a giant dividend, so it might be going towards that. So I don't know. I think that Uber has a lot of potential growth going forward, but there are definitely some risks to it. There definitely is a premium that you're paying for it. And it is definitely just, a software app, but I think there's a lot more to it than that. And I think Wall Street is going to realize that Uber is a very, very strong business going forward. I think that they're going to continue to report very strong earnings. The stock's going to continue to do very well. But I think it's going to have big tumbles because I think it's very healthy for such a high growth stock to really be tested a lot. And I think they really want to see how high is the growth, right? And for how long can you really sustain that? So that's kind of how I feel about Uber. I think that the stock is going to continue to do very well. And I'm a long-term shareholder in Uber. Next up, I have American Express Company, ticker symbol AXP, currently up $822.69, or 29.18%. I currently have basically just 10 shares. I paid about $28.1903 for it, and it's currently worth $36.4172, and it pays me $32.82 in dividends annually. So this stock, I'm not selling any of. I don't ever really want to sell any of my American Express. I want to just continue to hold it, and I want it to just pay me dividends forever. That's what I want out of my whole portfolio, I guess, also, is just to be able to collect the dividends for the rest of my life and have the stocks continue to be able to grow over time. But American Express just feels like a special one. It is, the highest percentage stock in my portfolio other than Apple. And I really think that American Express is a very special company because it's very hard to get without paying a premium for. And the reason for that is you're getting very secured growth at a very high rate. And so you need to pay some kind of premium for that. And over time, people really let American Express kind of fly under the radar. I feel like their performance is unbelievable. They don't get nearly as much coverage as they should, because the business model feels very boring. It's not like marketable like what Tesla and Elon Musk are trying to do or what ChatGPT is trying to do. But it gets the job done and it makes money. Makes a lot of money. And there's definitely a tale of two economies right now where you definitely have like the very rich people who are doing very well and they're spending a ton of money. And I want to own the company that owns a lot of their debt and owns a lot of their annual memberships and does all their transactions and all that in-house. And it's showing that company is doing very well. The rich people are spending a lot of money. They're doing a lot of things that are profiting American Express greatly. And it's shown throughout their earnings. And American Express is just uniquely there to capture this group of affluent investors. And the thing that a lot of people were worried about, which was the future, which is Gen Z, they've been spending a lot too. I mean, they've been spending with millennials a ton of money. So we've had a lot of spending through American Express, and it's been very bullish for the stock. Stock's up 29.18% from when I bought on average. I had bought on the dip. I didn't sell any of my shares. I don't really sell shares very often unless I'm going to profit a lot. And I'm not selling any now. You know, it might be a good time to sell some. I don't really care. I really want to hold this stock for the long term. I think that the continued growth is there. And I think we're going to have more continued growth into the future. I think that the business model just lends itself to very nice, steady, good compounded growth that you just want as an investor. That's the stuff you just want. Next up, we got Vici, ticker symbol Vici. The stock's been getting slammed. I think this is different than Salesforce. I think this is definitely a buy a dip opportunity. Again, just a guy in a basement, a dark basement, not a financial advisor, but I really like this stock. I think that this stock is very strong, very high dividend yield. If we get rates down, it's they're going to be knocking it out of the park. I'm very bullish on this stock. They own a lot of the Las Vegas real estate. Their clientele is very strong. I think experiential real estate's not going anywhere. I think people want to continue taking trips. I think people want to continue spending money. I think this kind of goes into the American Express argument that I was talking about earlier, where very affluent people are spending a lot of money. I don't think Vici has anything to worry about with their casinos or with some of their other experiential real estate. I think the stock is going to continue to do very well. And that's why I kind of want to cap off my investment. I kind of want to just get another $500 in so that I'm at 10,000, and then I'm just going to collect the dividends for the rest of my life. I don't care about the number that says I'm down. I'm just going to collect my dividend payment, and I don't really want to sell any of this stock. I think it's very stable. I think it's going to be able to fund a lot of other things because I'm going to be able to take the dividend payment and reinvest it into things like Uber. But I think it was very important for me to have the discipline to get that stock up to that 10,000 number first. Same thing I want to do with the waste management. So then I can get those dividend payments to be able to reinvest into a lot of these other businesses. And that's kind of what I'm thinking through the stocks that I'm investing in right now. I really want to build that very strong base in companies like Vici and companies like Waste Management. So then I can reinvest into the other businesses that might have greater growth but are a little bit higher risk. And so that's kind of my idea for the long term. And that way I just have those built up. And that way I can also just take the money if I want to take the money, if that makes sense, and just, be doing very well. So I'm very bullish on Vici going forward. I think that the business model makes sense for higher growth as well. With lower rates, they're going to be able to definitely make more money, obviously, because they're not going to be paying as much in debt. But with Vici, they're able to essentially just take on either more properties or pay off more debt with the profit that's coming to them. And so over time, they're just going to be able to grow, either continue to grow the free cash flow or continue to pay off more of the debt. Either way, they're going to be able to create more equity for the shareholder. As long as their renters are able to pay their rent, I think this stock's very solid, and I don't see the renters not being able to pay their rent because casino operators tend to do very well. Now, the only threatening thing is if the casino goes bankrupt, but then someone else will probably want to operate that casino. So I think Vici is going to do very well, and I'm very bullish on Vici as a stock and as a shareholder. Next up, we have Salesforce, ticker symbol CRM, which I kind of talked about a little bit before, but I'm down $1,878.04 or 17.56%, which is definitely, a punch in the bag. Doesn't feel good, but it is what it is, boys, and I'm going to ride it out because I really believe this is undervalued. I think that this stock definitely is going to continue to grow. And I think that this is a very good hedge against the AI kind of bubble play. I think that if the AI bubble pops and if AI isn't what we think it's going to be, which is probably the case, and doesn't materialize the way we believe it's going to materialize, which is probably the case, then I believe that Salesforce is going to be able to continue to do very well. But where my concerns really lie is that the growth needs to be there. We need some quarters with some good growth numbers. And as long as we have that, if we can get back to some double digit consistent growth of the free cash flow or of the revenue, I'm going to be very bullish on Salesforce. I remember they upped their own forecasts, which I know doesn't really mean anything, but it means that they believe that they could hit a certain level of revenue that exceeded Wall Street's expectations and models for the company. I believe it was 60 billion. I don't remember exactly, but I think that Salesforce is going to be able to continue to grow and continue to do well. And I'm very bullish on the stock. I think he's gotten just overly beaten here. And really don't believe in selling right here. I really thought maybe I could sell about half and then take a tax loss and then put the other half in Meta. So then I kind of have the most bullish on the AI trade and the most negative on the AI trade and kind of have them fighting within the tech companies. But I feel like it's better just to keep my sales force and just to stay put with all my positions and just to take the L in the short term, because over the long term, I really believe that their results are going to be very positive. But again, I could be wrong. I've been wrong the whole time holding it, so we'll see what happens. But I'm interested to really just see. I think it's going to be positive. I don't think it could get much worse. I mean, there's not a lot of debt on the balance sheet. They're making a lot of money. They have a lot of mergers and things that they've been acquiring. The earnings are December 3rd. I really feel like Wall Street's not expecting much. They're going to be very pessimistic. That's when Salesforce comes out and just delivers a heater. But we'll see. I'm kind of interested again to see what happens. So that's Salesforce in the portfolio. Next up, we got Waste Management, ticker symbol WM. Currently down $50.59 or 0.57%. So this has come back now from when I had bought the dip. I had bought below $200 recently. I think I'd put either $500 or $1,000 down and just bought this because I wanted that compound annual growth rate of the dividend. And now we're pretty close to our break even. Obviously, that dividend income is higher than the current amount we're down. So not really too concerned about it. I actually really think that this stock is probably still undervalued here, just again, unprofessional opinion. But I think for the growth and for the security you're getting in a business, I mean, this is just a very strong business. This business is shielded from a lot of the political pressures that could be coming at it, just many of the pressures that affect other businesses. People aren't going to be canceling their trash, and the amount of trash demand is going to continue to increase. If you own the landfills, you can pretty much charge what you want for picking up the trash. So I'm very happy with this stock. I think it's very monopolistic. I think it's very valuable. I think it's very inflationary proof. It's a company that I'm very happy that I have a lot of in my portfolio, because this is definitely the time to be buying it when everyone's loading into the hype tech stocks and the AI trades. That's when I want to be a waste management owner, when the premium for waste management has gone very low and people aren't excited about the stock and they think it's boring and they think it sucks. That's when I'm going to be picking up more. And that's when I'm going to be adding more to my personal portfolio and my own position. This is another one of those businesses, kind of like American Express, where I just don't want to sell any of it. I'm just very bullish on this business for the long term. Pretty much it. I mean, I think it's a very just wonderful business that over time continues to compound, have good growth. I think they increased their revenue like 15.7% year over year when Wall Street was looking for 16 or something like that. I don't know, but I think that's awesome still. 15.7% growth of revenue over a year in the waste management business is, I think, very strong. So this business has a lot of advantages going for it too. It's got economies of scale. It's really a bully, but again, I want this to function with Vici, kind of like I said, where these are going to be the big dividend payers that are able to reinvest into other things in my portfolio when I got a lot of physical cash. And when I don't have a lot of physical cash, these guys are going to be dropping me huge amounts of income pretty much quarterly that are going to help to supplement with my job and, with whatever money I'm bringing in. So that's kind of the goal between those two investments, I guess, is to get those each to $10,000 because I think that's a pretty significant amount of money. And over time, they're going to continue to grow, obviously, and the dividend's also going to continue to increase. So it's going to continue to be able to either one, support my lifestyle, or two, support my portfolio so that my portfolio can continue to grow. And it can really just be a self-sustaining thing so that eventually it can just get to the point where I'm just like, I don't really want to put any more money into the portfolio. Let me just, take this money out or whatever. Let's say, Waste Management and Vici, the dividend just keeps compounding and growing and getting bigger. I could just say, okay, let me just stop putting money into this portfolio. Let me just let those two stocks kind of carry it and invest in all these different things. And then maybe one of those things really takes off like crazy. It has an insane run. And then I'm able to liquidate some of that and kind of support other things. And, the cycle continues. But it was very important for me to get into these stocks at a very good value that I understood and to try to get the dividend very high for the yield. Now, obviously, I didn't think Vici would be presenting itself as such a good value after I'd already invested so much into it. But I'm still getting paid $541.18. So those are kind of my thoughts. I know I went on a lot of rants, but I wanted to make this episode a little bit more kind of interesting and give kind of my insights for why I'm actually investing in these things just personally and why I think it makes sense. But I'm interested to hear what you guys think. I also think that for you guys, you should be looking at different stocks than me because everybody's situation is different and everyone's goals for investing are different. So definitely know what you want from the companies you're investing in. But this is kind of just my thoughts on the things that I'm invested in currently. So let me know what you guys thought. Please hit the subscribe button if you like the videos. Please hit the like button if you like the videos. Thank you so much for watching. Have a great rest of your night. Bye.